All right, guys, let's go ahead and get started. We'll look at these charts. Go for about an hour, roughly an hour. And we'll just try to figure out where things are heading next week. Look at maybe try to find some individual trade ideas. Let me know how my audio sounds and we'll get right into it. Just give me an audio check. I'm going to start off today, obviously, with triple Qs. Last week, the last 2 weeks were really focused on large cap tech. And so we had just all the large cap tech earnings come out. In general, I would say most of them popped on earnings, or at least after earnings. And we'll kind of talk about that briefly. And then we'll look at that. So on earnings, the large cap techs, when they came out, they popped, and most of them. I mean, as we go through these fangs, let's swing over to that. We'll start with Microsoft. I mean, here's the Microsoft earnings was basically here. All right, a little breakdown. There was that was pretty consistent, I would say, across the board, as we saw these little breakdowns right ahead of earnings, and then they popped right after earnings. So, I mean, one thing to kind of take note is, if you see a breakdown occurring right ahead of earnings or right ahead of some sort of major event for that stock or for the market in general, you definitely want to kind of take that with a little bit of skepticism. You're not going to see major players taking big positions right ahead of earnings. They're just going to wait till afterwards. So that's that. And you can see here's Microsoft, and then they rallied it up. So, they made it look a little bit more of a rally by dropping it down ahead of the earnings. They closed, it was up 7%, but previously in the days leading up into the earnings, it had fallen, roughly about 5% or so. So if from that former high right here, it rallied about, after earnings, if you just look at really where it rallied, 1%, it was about 1.25% or so. So if you owned Microsoft, the headline, the way they make it look like it rallies a ton, they drop it ahead of the earnings. So, okay, that's that. Now Microsoft held up for the most part in, after earnings. And I think that's to be expected, because here's the thing. Everything wanted to clear out like Apple. I think those tech earnings, they weren't going to drop a ton unless they were going to drop a lot on the Apple earnings. And Apple, for the most part, I've been talking about it, they know how to custom tailor their earnings to beat those expectations. Doesn't mean that Apple's performing amazingly. It just means that they know what the expectations are. They know the amount of money they need to put into stock buybacks. They know the amount of, they know the kind of guidance they need to give, things like that. And how to really gear those earnings to beat the expectations. So they're pretty consistent on that. I don't remember the last time Apple's gone down on earnings. Now Apple oftentimes will sell off after earnings, but to go down on the earnings report, I don't remember the last time that's actually happened. It's been many years. Okay, so getting into that, Microsoft, where are we? Well, still within this range. I mean, this is acceptable. range of potential resistance. Resistance on Microsoft. The one that I really have, there's a couple things going on. One, we have this uptrend line. This is a pretty clear uptrend line shown on the weekly chart. I mean, when I go, if I get rid of all my little markings, you can see there's a reaction. If I roll out, there's another one there. There's the COVID drop right there. That's 3 reactions. All right. And then as I zoom in, kind of creep up, there's a bunch of weeks right in here where it held. And then finally it broke. And when it broke trend, that's a pretty big impulsive breakdown on the weekly candle. So that looks like a sell signal on this larger time frame. Now, larger time frames take years, especially the weekly. This is kind of a multi-year time frame. And then we've rallied up for a back test. Now, yes, we are above it right now, so we'll watch that, okay? I'm thinking that we get the breakdown next week. Now, we don't have any FANG earnings left. I know we have CPI on Wednesday. Maybe that's there's a big sell-off on that. But there's no FANG earnings, no large cap tech earnings to hold us up. So if the market's going to sell off, it's free to do it at this point. So that's what I'm really looking for. If we don't get it, we continue to hold up. If we go sideways, I'm fine. But if we start to really build on gains, then we're going to, we need to start to look to stop out in certain areas. So that's Microsoft. Okay. We did just make a new higher high on the weekly. There was kind of your former high, and then boom, big rally, mostly on earnings, above that. So, yeah, that's that. I don't like to see that. Let's keep that in mind. But yeah, so next week's going to be telling. Let's go to Amazon, and we'll just go down the list. I mean, Amazon on the weekly could potentially rally a little bit more. You've got this downtrend line on the weekly, and we're just below it. So we could rally up into that trend line as the next level of major resistance. If I go to the daily on Amazon, a rally into that trend line would also be a rally kind of into that former spike high right there, that is an island top. So an island top, you can run up to the top of the island and still hold that island top reversal pattern. You don't really want to see anything much above that, especially on a daily closing level. So keep that in mind. The Amazon could rally up to about 113-ish and still keep that pattern, still have that downtrend line, and still be, still be an objective shorting area. From where we're at right now, that would be a rally of about another 6-7% up to that trend line. So maybe not. I don't know. The other thing is with Amazon, we never really had that negative divergence. All right, we've got this spike high here, and we've got lower momentum from that spike high, but we also have lower prices. So yeah, I could see that. You spike up, make kind of an equal high right into major resistance, and if you did that, you would then have that negative divergence. So maybe we get that, maybe we don't. Google's kind of treading water here. Let's look at the weekly. So on the weekly, I like the GOGL is a little bit better. This is coming off the 09 lows, and you can see nice clean. This is basically the bull market since 2009. And you've got, boom, you got a break during COVID, but ultimately you see what's going on here. We're in a bear market. We broke that trend. That trend's been cleanly broken. All right, you broke it, boom, you backtest it once. They're making it look like it wants to backtest again. Maybe it does, maybe it doesn't. But this trend, the upward trend, lots of reactions to validate that has now been broken, and I believe that it's sell the rip now. So doesn't mean you can't rally back into resistance, but that's sell the rip, short at resistance. Ultimately, I think we go lower and make the next leg lower on that one. So that's Google. And then Apple. Obviously, the big player is Apple. So on Apple's weekly, the weekly chart, this is your bear market downtrend line right here. It shows a little cleaner on the daily, to be honest. On the daily, there it is. So, all right, boom, boom, boom. Several reactions to validate that. There's another one for, okay, and we're above it now. So here's what we really have to watch. All right. We broke above. This to me looks like a back test, and and then we held that back test and we're rallying from there. That's bullish in general to see that. I see that pattern and that price action. That's bullish for sure. One caveat, all right? We're rallying up, making a new high with negative divergence. So that's another thing to keep in mind. As long as you have those divergences, each time you make a new high, there's elevated probability that you're going to sell off from that high. Doesn't mean you can't make another new high. There's no, divergences isn't telling us that, oh, we're going to sell off now. And it's just telling us that every time we make a high, there's likely a wave of sellers that are about to show up. Where if you don't have the divergence and you make a new high, it's telling you that in general, this is a buy the dip trend. The market is trending higher and likely will continue to trend higher in the future, where this chart doesn't tell me that. This chart tells me that this little spike high is likely going to get sold into. All right, so bullish price action for sure to see it kind of break out like that, but on a divergent high. And it was on earnings, so, let's see what they want to do with this next week. They build on these gains next week. Now that we have earnings out of the way, it's going to be hard to say that that's bearish, and we'll have to look at that. If Apple's going to be bullish, likely Triple Q's is going to be bullish, and the rest of the things. Here's your former high, and I was really focused. Let me zoom in on this. I was really focused on this price action after earnings, and it's really right in here. So your former high close was 174.63, roughly right in there. That was the highest close that this thing's had since August of 2022. And then intraday, it reached 176.29. So those key levels are kind of important to me. And if I zoom back into the most recent price action, you can see your former, this is your former high close, which is 174.56. Couldn't quite get that close on Friday. We closed at 173.54. And then it did spike intraday into that former close high, which was resistance, basically 174.40. So you're probably going to get a pullback here. I doubt they're going to just run right through it, but you start closing above these levels. You close above 174.50. I can probably handle that. A close above this 176.30, and we start, unless it's just barely inching above it, but you get an impulsive close above that, then it's I don't know how to mark it up as anything but bullish, basically. So here's what'll change my mind, just to give you guys the other side of the picture. All right, if the bear market is over and Apple's going to go on to make new highs, then first things first, you need to close above these former highs, all right, to put that downtrend in question, all right, starting to make new higher highs from the former highs. These are very clear downtrend highs, kind of previous bear market rally highs. So to keep the bear market case, not completely in, you can still have a bear market if this breaks, but to help with the bear case, we really would like to see basically this be around the high, all right in this area. So we're at that key level, and that's it, So we'll watch those levels, and then if we break down and start to roll over, then yeah, should be lights out. A break back below this downtrend line, back really below these lows. From my perspective, the lows right in here would be, probably the next kind of impulsive sell signal. I don't want to add anything to my short. I'm not adding anything to my shorts right now. We're at key levels, so I'm just kind of hanging tough. If we continue to rally, I'll start to look to stop out. All right, that's how that's going to work. But otherwise, I think the case is still there. I think we're okay. Again, whenever you're taking a position at a key levels of resistance, you are, or when you're near key levels of resistance, you're at that point where, you're at the pivot point. So usually things are stretched right into those resistance, and that's about the moment or point where it's going to turn Doesn't have to be on Monday or anything, but okay, so a break back below 164.40 should be an indication to the market that this bear market rally is over. All right. We also have this bear market, this bearish rising wedge pattern, spiked it to the upside, but again, just right after earnings, and you can see this. It could be this kind of price action looks like a stop trade, but we need to see confirmation, and we need to see this start to reverse. So looking for reversals in Apple will be critical. Doesn't have to be next week. If Apple just grinds sideways next week, I'm fine with it. But if it continues to move higher, that starts to change the bearish outlook in Apple. So that's what I'm looking for, guys. And then going back to triple Qs. Triple Qs made a new high on Friday. And again, there was just kind of auto buy. To me, it looked like a lot of short covering, and it was just basically Apple earnings. Apple just spiked up, and so everything kind of was being lifted by Apple. But that's just a one-day event. That's a earnings, post-earnings euphoria. Let's see if it continues. That's kind of the critical thing. Made a new high on Friday. If I go to the hourly chart here, you'll see, here's the thing. They spiked it right here above that kind of former high. So we can't really say that, this was a false breakout for sure at the moment in time. We had that range. It was a false breakout. We headed down to, didn't quite get to the bottom of the range. We headed, down there. And then they spiked it back up on Apple earnings, making a new high right there, just slightly really intraday there. And that's a divergent high as of right now on the hourly and on the daily. You'll see here on the RSI, if I zoom in on the RSI, starting to confirm that hourly divergence right there. See how it's turning down? So it's spiked up and starting to turn down. Usually you'll see the RSI start to confirm before the PPO. So next step is you want to see the PPO confirm the negative divergence on the hourly, and that will set this up for a move lower. And then if you go back to the daily, it's just another divergent high that's likely going to get sold into. I'm looking for this trend line here on triple Qs to break. Okay. That would be kind of the sell signal, the next sell signal. Didn't obviously get that gap down on Apple earnings, so, was wrong about that. But I talked about how it's pretty tough. I wasn't super confident. I just threw out a hypothetical of maybe one way it could play out. Nothing I was positioning for based on it gapping down. But all right, so that is that. Let's look at the NASDAQ futures. And I'll go ahead and then get into your guys' chart. Same look. See, here's one thing about the futures. Look at the futures. So, the futures, their range is way back here. This is your April 4th. It's your April 4th high. And we've basically held that range since April 24th. April 4th. Over a month of sideways trading action, and we're just at the top of the range, All right, we were at the top of the range a little bit there, top of the range, and right after Apple earnings, the most they could do, there was no technical change, at least in the NASDAQ futures, on Apple earnings. The best that Apple earnings could do was rally it back to the top of the range. So that's the way I'm viewing this. That strong rally in Apple and the market in general, all it really was able to do is just bring us back to the top of the range. Now, if we can break out of the range in the futures, that starts to change the technical picture. All right, but I don't see that right now, so I can't, That's it. All I see is a big sideways range in the futures, and that's the hourly. If I go to the daily, negative divergence has been building for a while. This can continue to build. We'll see. But, again, this big sideways range here has still held. So, all right, look for the breakdown. I'm still anticipating it. I don't see much change here. Now, If the technicals change next week, then I'll start to I'll point it out. The best I can do is point it out and say, well, I don't have a case to build here anymore, so we have to look to probably stop out. But in general, I mean, if I stopped out, try to point it back out. Back to the hourly, if I stopped out in the past, right here when it was rallying strong and all the bulls were pounding their chest, then it would have gone down after that. The thing dropped from there down to there 2%, and the bulls weren't pounding their chest here, and now it's this, and so no technical change. Okay, that is those markets. And now I'm going to go into your guys' charts. You guys let me know what you want me to look at. All right, drop me a thumbs up if you can. I do appreciate that if you haven't hit that like button. All right. All right, let's see. We'll start at the top. Natural gas. Not super interested in natural gas right now. Here's the futures. Let me look and see if there's anything going on. Definitely looks like it's building this basing pattern here. See this big sideways basing pattern? And you've got it with bullish divergence on the daily chart. So on both momentum indicators. So for sure, it looks like momentum is building. We need to see some sort of a candlestick or something that helps us know that we're done basing. You got the lows right here. Yeah, I don't know. I'd say this to me looks kind of like two reactions. I only have two, so I can't quite say that's the bottom, but I don't have enough to go off of here. I think maybe, as a speculation, if you're buying down at support-ish down here, it could continue to drift a little lower and put in divergent lows, but that would likely get bought into. And so I think the downside's relatively limited. That's the futures. And if I look at UNG, so UNG continues to drift lower. It tries to track the futures. It doesn't do a perfect job. It's probably putting in a bullish falling wedge if I can kind of mark it out here. It looks to me like it's, I probably have to tighten that up, but looks to me like it's putting in some sort of a bullish falling wedge pattern. Okay, so watch that pattern. The buy signal would likely come on a break of this wedge. All right, look for an impulsive break. You got the bullish divergence. It's just not ready to break yet, so I don't have a buy signal on that one quite yet. EA and W, I think we talked about this one last week. Negative divergence, broke trend. This is bearish chart. Should head lower. There's no change from the last time we talked about it. So you have earnings coming up, so could go either way on earnings. Again, earnings is kind of a 1 or 2 day gamble. If you have something right at support, it could go either way. After earnings clears out, the charts are a lot easier to analyze because you get these gaps on earnings and kind of erratic price action. WBD, that's Walgreens maybe, or Warner Brothers. This one. Okay, so that looks like a support level there. Let's see what it did on earnings. Yeah, see, I've actually got it kind of perfect there on that one, but it did dip below intraday, but kind of held that. So we'll say that's support. And then not a lot of reactions on that top trend line, so not my favorite, but that's the best I can go off of. Possibly a bullish falling wedge. You do have the bullish divergence. It is, ever so slightly there, it looks like. So, yeah. I mean, the buy place was the divergent low, right? You made the divergent low, and that would be on your trend line support. That's where you want to buy it. I don't want to buy it up here. You want to buy it on a breakout or at support. That's it. So, Okay, I covered triple Qs and Apple. Snow. Oh wait, let's not skip Lyft and DKNG. Lyft. Okay, Lyft. I know they got bombed out on earnings. I saw that, but made a divergent low on the earnings. This chart's gotten pretty choppy. I almost need to start over. All right, this looks like my support line now. Right in there. Somewhere right in there. Probably have to just take the lows here and we'll move it up. About right there, I think. I don't know. The support, the chart's gotten a little messy. We'll go with that one, I think. Looks like it's kind of trending lower. Momentum is lower. Price action's lower. Just in general, looks like it's trending lower there. On the hourly. Yeah, I don't know. No real opinion. I'd say it just looks like it's trending lower. DKNG. So this is one that's rallied. This is possibly a short opportunity. We'll look at this. You've got a nice little uptrend line there. It's not bad. And then you have a, divergent high, it looks like, here. Not confirmed yet. So you'd want to see that confirm. Look for the PPO to start to turn down to help confirm. But you do have divergence as of now on both momentum indicators. Again, not confirmed on either one, so you'd want to see that turn down to help confirm. And then you have this potential bearish rising wedge. So you'd look for a break of the wedge for the sell signal. And yeah, we're probably heading lower. But no sell signal on that one, so that one's got a little work to do. Snow. Okay. Snow. I wouldn't short Snow. Let's put it that way. To me, it looks like we had a nice downtrend. Looks like you broke out, back tested, and kind of holding that. So, something like that. You got earnings coming up, so here's your last divergent low right there. We haven't made a divergent low since. I don't think I'd want to be long it ahead of earnings. Maybe, because this thing could get bombed out and make a new low. That would probably be a potential buy point if you see that, something like this. It'd have to be down just below 118, 119-ish. Maybe run down to 118 right after earnings, something like that. It'd be probably a big gap down on earnings. We're seeing that kind of stuff happen on these little tech stocks too. Big gap, big gaps down. So maybe you get a big gap down. If that happened, it would be a divergent low at support, So that would be a buy zone on Snow. If you get a big down day after earnings and you can kind of hold this trend line, that's probably an objective area to buy or to take a starter position at least. All right, that's Snow. Plug. This is the power one. Yeah. I mean, you have some bullish divergence starting to show up. You got earnings, so I don't know. Look at this downtrend here. Let's see, we probably need to clean it up on the hourly chart. Yeah, about right there. So here's the thing. You got this downtrend. It's breaking out, but it's doing it right ahead of earnings. I don't like that. I don't know. I think this could go lower. I mean, there's big support down here. I think you could head down here to 321-ish or somewhere right in there. I don't have an opinion ahead of earnings. Check back with me after earnings. There might be some more there. Not anything I'd want to go long on. All right, that's that one. CVS, which is the pharmacy company. Yeah, no change from last week. It still looks bullish. You've got some bullish divergence showing up on the RSI now. There is and it's confirmed, and then it's not confirmed on the PPO, but it still looks more bullish than bearish. We don't have a buy signal. You need to see a break of this trend line. Okay. Break of that trend line would be your buy signal. Again, 74.39-ish would probably be your buy signal. Okay. SMCI. Spike high, negative divergence. You know, this is similar to the triple Qs. Is this a semiconductor? No. Spike high on earnings, basically. I suspect they sell into this spike high. Looks like we got a little bit of an uptrend line right here. Yeah, there we go. That's probably the most important one to me right now, would be this trend line here. Support, support, support. Tighten it up right there. Yeah. And support. Okay. A break of that trend line would be your sell signal. You have negative divergence. I suspect you're going to get that sell signal sometime in the future. You're way up here now. So first things first, drop down to the trend line. It's a 20% drop. I wouldn't be interested in shorting this. I don't think this looks like a runner, so I'd probably rather just let it do its thing, get down to the trend line, break with the sell signal, and then, you know, and then you could potentially short it. Okay. LLY, I don't have anything on that one. I mean, it's been running just almost parabolic. The momentum is strong. You know, I see this strong momentum. You had negative divergence building. They burned through that. All right. So that's no longer there. And just in general, it's just strong momentum, strong price action. Pretty much gone parabolic. So I suspect you're going to get a pretty sharp pullback down, probably down to like this trend line right down here. Maybe more. But I don't have enough to go off of to tell me that that pullback's coming, you know, soon. I mean, even the hourly chart, I don't have any negative divergence on the hourly PPO. I do have it on the RSI, but not on the PPO. So, yeah, this has a little more work to do. It's strong. You know, I threw it out as a potential trade idea the other day because it was at resistance and it had... it did have some negative divergence, but I didn't take the trade. I'm not involved in this one right now. Okay. Microsoft, covered that one already. McDonald's. Yeah, still holding that bullish trend. This is the hourly chart, but see that bullish trend? They dip below it briefly. Not impulsive, though. Again, the sell signal that you want to look for is impulsive selling. Big red candle, not just this little tiny, like, you know, peter out. And then it was down here, but they recovered it. That's not impulsive. So, still holding trend and starting to have some negative divergence on the daily. It's there now. It's definitely shown up on both RSI and PPO. So, I think you get a break soon, but no break yet. You need to see a break of this trend line for your sell signal. And then if you do, you're likely, I mean, you got these former reaction highs, so I just watch these. You know, that would probably be a nice target right in there for your first reaction, 281, 289. Sorry, 280, 2-ish, 281.88 is what I have it at. You want to step in a little bit early before you hit a level and take profit if you're looking at, for your targets. ZM, Zoom. I don't see much here. Not from a trend trade perspective. You got earnings coming up, so that's a gamble. I don't see anything in the chart. Well, if I roll out, sorry, I had to roll out a little bit. There is some bullish divergence, kind of showing up. Let me just check this. I mean, from my perspective, I can't really make that as a trend line, to be honest. So I don't have an opinion on this one. Not something I want to be long on. It's just not that clean of a chart. So no opinion on that one. All right, guys. Got to try to keep your picks to just one or two so I can get through everyone's. KRE, that's your banking sector. That's your regional banks. And, I mean, you got bullish divergence. So, there it is. These things got really destroyed pretty bad. So, there's some issues here. I mean, yeah, you're going to get reactive bounces back. I mean, if this wants to rally strong, I see this as your major resistance level up there, 56.65. So that would be a strong rally. Is this something I want to buy? No, I don't want to buy it here. Looking at the hourly. I mean, yeah, this is a divergent low for sure. Like, it just made one. But from that low, it's rallied up. Well, that's 11%. I don't want to buy it up 11%. And this is your next resistance. Okay, we're above that. Looks like it gapped right back above that. So you probably, maybe the top of this channel. This channel might hold as the downward channel. Okay, maybe. 11-12% potential rally on that one. I'm staying away from it. That's too high risk for me, but you could get that. I don't know if you're going to get this way up here, but all right, Nvidia. Yeah, that one rallied on Friday. So here's, this is, we'll see. Here's the thing. The bearish case that I can make on this, I'll just make it right now. Your former reaction high is right here, all right? That's my former reaction high. That was a bear market rally high. I really don't want to see Nvidia start closing above that. You can get like a minor daily close above it. I'd be okay with that, but you see some sort of impulsive buying rally above that. It's hard to make a bearish case on this one anymore. If we see that. Now, again, we're right at that former reaction high, so if we get rejected here, and this is the point where you would get rejected, so it's very objective to short here, I believe, with a stop slightly above. And there it is. The former close was 287.66. Okay, if I kind of drag this down, right there is about well, you have to get really close in just to see, because it's a pretty tight candle. Right in there, about 280. Yeah, it was about 287 or ish. You can see where we closed on Friday, 286.80. So closing below the former close. All right, that could be a sign. I mean, maybe next week they just come out selling, and this does hold as the high. If we get that, then we're going to have, we're going to have, this will be the top of that trend. And we did close actually right here, though. You can see we did close on just briefly at 289.20. So again, that's not, you know, this is the former, I have to really zoom in to show you guys. Okay, that was kind of your former intraday high. It was about right where it closed at recently. So closes above that start to damage the bear case on this one at least, especially impulsive closes. All right, ideally I'd like to see no closes, daily closes above that, but if we do get it, I just wouldn't want to see it much more than just a marginal, just a little bit over, you know, not much more. So I'm really am looking for selling to start to show up in this thing. And we have bearish rising wedge. We have negative divergence. So the bearish setup is definitely there, and I'm just looking for that price action to start to show up. If this is going to sell off, it's free to do it now because Apple's out of the way. You know, for the most part, this thing rallied on Apple. You do have earnings, obviously, on this one at the end of the month. So maybe they hold this, chop it sideways. I don't know. We'll see. If Apple starts to sell off, we're probably going to get a sell off on this one as well. And then you'd want to obviously look at the semiconductor index as well. And in general, negative divergence. All right. I mean, if I roll out and look at the last times I had negative divergence, just go back and look. You know, this is a big negative divergence too. Here was a little one, okay? And from the high to the low, that was a 15% correction. You know, this was a negative divergence, just showed up, and you had a correction there of 30%. No divergence really there. No divergence there. And then your former highs, big negative divergence right here. Okay, you can see, look, new high, new high, new high, divergence, building, building, building. And, you know, that's the start of the bear market for this one. So this divergence right here is as big as the one that we saw when the bear market started. So seems to me like it's definitely done its job for trapping in a bunch of bulls. And if the market's going to make its next leg lower, it should probably do it soon. You know, you should have enough bulls loaded up in this thing where you're going to have a lot of sellers if it's going to start to roll over. So, okay, that's that one. Let's see here. Net. Did they get sold out? Yeah, they did sell down. Yeah, I don't have much to go off of here on net. I mean, look, there was a trend line. You had earnings. You had no divergences telling you which way it was going to break. Could have broken up. Could have broken down. It broke down. It was a gamble. So I don't have any. I don't have much to go off of. I mean, you're probably heading lower. I would say. The momentum's down. Price is down. So. I mean, look. Here's your high. Lower high. Lower high, lower high, okay? And then you got lows, lower low, lower low, slightly lower low, probably going to go make a new lower low. It's in a downtrend. That's it. Wheat. I like wheat. I like wheat long. We'll look at the futures to start. Look at that. Bullish falling wedge. Little stop raid, flush out move, followed by strong impulsive buying. Big old green candle, buying. All right, closing. That's a strong week. Let's look at the week. You were way down here, intro week, but by the end of the week, closing back within the wedge. Okay? So, you know, it just shows that little dip down was a stop raid, you know, and I know it definitely stopped people out because I had people commenting they had to stop out because we broke the wedge. And I understand that. From my perspective, I have a big bullish divergence, and a breakdown like that always look like false breakdowns to me, where I suspected that it was going to be a false breakdown, and it was. So that's probably the most objective buy zone you're going to see on wheat in the near future. Right there. Okay. As I roll out, there's decent support right about It's right in here. Support. Yeah, they held it there. Support, and the buyer stepped in just a little early. So I don't think we're going any lower in wheat, to be honest. I'd be surprised to see a new low below that. I think it's off to the races. It's probably going to go like this. All right, maybe a little pullback like that, maybe not, but ultimately up. So I like it. It's one of my favorites for a long trade. GDX. I mean, GDX, you just made a slightly higher high, but it was a divergent high right there. Okay. So I can see some downside in the miners coming. I'm not looking for a crash, but I definitely could see some downside. When I look at the, here's the futures, spike high. It's a divergent high. Look at the PPO starting to get rejected. Let me zoom in on that one. See it? It's starting to turn down, get rejected. You don't have any kind of a crossover. That's a divergent high it's getting sold into. So 1967 probably is a minimum, and then potentially down here to about 1915 or so. Potential downside targets. The miners should sell off with that move. And then if you look at the dollar, I haven't looked at that one for a while. See, you got strong bullish divergence that's been building. So this is the point that I'm trying to make. Even though the Qs and stuff kind of keeps like popping higher, making these little divergent highs, it's just building divergence. That's like a pressure cooker building. And the same with the dollar. The dollar is bullish momentum, and you just are, you're making, there's a divergent low, there's a divergent low, and ultimately likely going to start to spike, move up, trend higher. And if the dollar's trending higher, you're likely going to see stocks come under pressure. So it's not just the triple Qs that I see, that the downside in the triple Qs. I see other things like the dollar has upside. A rising dollar is negative for stocks, especially things like CAT and internationals. And look, where's the strength in CAT? The only strength we're seeing is in these FANG stocks, and they're diverging. All right, they're popping up with divergence. I don't see any strength here in CAT. I see a downtrend, so CAT's likely heading down here to fill this gap at 199, about 200. So again, I know most people that have 401ks, they've got allocations to the FANGs, so that kind of props everything up, but it's false strength. At least that's the way it looks to me, is, you've got these little spike higher, and you're diverging, and before you know it, flush out, and it's all gone. So that's that. That's all I mean, obviously could be wrong, but this is just what I'm seeing in the markets. Let's see here. Just kind of rolling through these comments. Some people are bullish. I mean, I get it. Bear market rallies do their job. If I'm wrong about the bear market rally, then being bullish is obviously the right play. All right. And maybe I will be wrong, and we'll find that out probably not too far away. But if I'm right, it's done its job of sucking in bulls. It's all across the media, new bull market, blah, blah, blah. Look, go back. Like, was anybody calling for a big bear market way up here in the media? No, everybody was saying the trend is your friend, and the trend is up. All right, and that's it. So, and trend, trend followers wouldn't have really recognized a potential bearish trend till about right there, because you made a new lower low. Just then, it got reversed. So whether they stuck with their decision or said, it is still bullish, and bought back in, who knows? But yeah, so I'm still sticking with the bearish thesis for now. Until I see the charts change, we'll just stick with that. All right. Let's see here. Someone says they just buy the dips and it works out 90% of the time. Well, it depends on what your time frame is, I suppose. I mean, look, if you were buying dips in 2022, that means you bought here, you were rewarded, but did you sell? I don't know. If you bought here, you were rewarded, but ultimately you started losing. You bought here, all right, you lost money. You lost money. You lost money. Every single dip was a lower and lower dip, which means every single dip that you bought was ultimately a loser in the near future. Okay? So, and, these are buying it. That's saying you're buying at the very bottom, like you're just perfect. Most likely, that's not how it played out. Most likely, if you're a dip buyer, you're probably on a day-to-day basis. You see a little one-day dip, and you're buying and you get destroyed. Now, where we're at now, yeah, we are trending higher for sure. So dip buying has worked so far. And again, bear market rallies, dip buying works, right? But when's it end, or is it a new bull market? Doesn't look like a new bull market to me. I mean, this rally is diverging high. It's a negative divergence. So yeah, it could go a little higher maybe, but ultimately it's probably going to do that unless something changes in the charts. All right. All right. Lots of commentary going on. Let's see here. Okay, Tom. We got it, man. It's cool. You got your opinion, that's fine. Let's see here. What other charts? I'm going to go for another 10 minutes, guys. So you have any more? You guys have any more picks? RTX. What's RTX? Raytheon. So this was an uptrend line here. We'll just go ahead and get rid of that one because I don't need it. Man, that is a massive plunge on COVID, isn't it? I didn't realize this one plunged that much. 60%. So I'm going to go with this uptrend line as of right now. I've got a reaction here and a one right there. So we're going to go with that. Let me, I wonder if I can tighten that up a little. Yeah, doesn't look like maybe they stepped in a little early, but in general, we're just going to, I think I'll just stick with about right there. So it's in an uptrend, but it has been diverging for this. Let's see here. This is This is consistent with like the rally that we've seen, and all of this year. And there's your negative divergence on it's there on both RSI and the PPO. So doesn't mean that we can't go on and make a new divergent high and continue to diverge. That could happen. I can't say that I want to short this thing right here because of that support, but I'd really be looking for a break of trend. All right. So if it does this, it's probably going to do this and then break trend. But ultimately, it looks like it's going to break trend, whether it rallies from here or not. So I'd just be looking for a short on this one. And this would make sense. Like, this one actually hasn't really been in a bear market. I mean, the bear market, here's 2022, and I mean, it did drop 20% down here to support, but in general, it doesn't really look like it's been in a bear market. I think you could start to see that bear market show up in something like this. Here's your high. So watch this high. There's a former high that it just made, and it's lower. Okay. I don't have strong convictions on this, but in general, I'd be looking for this divergence to start to play out and look for downside. You see a break of this trend line, I'd put very good odds you're heading down to this, right down in here, about 80 bucks. And then you'll probably get a decent rally there, probably a bear market rally, and then ultimately continue lower because the major trend would have been broken. So that's that one. All right, let's see here. ESTC. Maybe a rally coming soon. Maybe, maybe not. I don't know. Let's let earnings clear out before. It looks like earnings would come out bullish because you've got divergences and stuff. But I'd probably just rather wait till after earnings. And you wait till after earnings, yeah, you miss the potential for a big gap up. And if you see the big gap up, it's not something you want to chase, but you also dodge a big gap down, or maybe even bigger. So it's just the way it is, If charts are set up, it's good to avoid earnings risk. Triple Qs, I'm diversified when I'm shorting or going long triple Qs, so that if I get one stock coming out with earnings, yeah, it's going to raise the triple Qs a little, but it's diversified a little bit in the tech sector, so I kind of avoid some of the earnings risk as in that one. Individual stocks is obviously different. Meta, I'm shorting that thing right now, and you can see they've been fading it since earnings. So here's earnings. It's down from excuse me. It's down from earnings, not a lot, but basically by 2.5%. So we'll watch that one. All right, let's see here. STX, is that Seagate? Yeah. I don't see any divergence. I see momentum moving lower. I see price moving lower, so that's a downtrend. Yeah, I think it's in a downtrend. I think it's very likely you're going to take out these lows and make a new lower low. All right, likely taking out this nice island reversal right there. See that stick where it did an island reversal, and that was the low. And sure enough, you got a rally. But that's played out. And now I see momentum heading lower, price heading lower. I think you're probably going to go take out those lows, probably. But at a minimum, probably head down to the lows. I wouldn't want to be short. Like, if you're shorting it, this is where I'd want to cover. And then if it takes out the lows, as long as you don't have divergence and stuff, then that would be your next sell signal. One more, guys, then I'm going to wrap up, and it will go with we'll go with Mosaic, MOS. Was that earnings? Yeah, broke down on earnings. Well, that looks like a sell signal to me. You can see I had this line at support. It was about 42.90. And it broke down with the sell signal on earnings. Let me just double check. See, the RSI is kind of making a new lower low, or kind of an equal low. Could be a divergent low. I don't know. It looks like a sell signal. So, all right, guys, that's all I got. I'm gonna go ahead and wrap up, and we'll catch you guys on Monday. All right. Thanks for joining. Take care. Bye.